Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. In today's episode, we're going to be talking about this new report, this new article written by Gene Munster, and I think there's a lot of very telling things in this article. Now, what I want to do is I want to tie this back to a couple very key pictures and graphs that we saw within the Q1 earnings report in the deck. Now, I want to go a little deeper into this. Some people have talked about these images or charts, but I want to just talk a little deeper about it and what this means and the implications overall for Tesla and just sentiment in the market when it comes to electric vehicles and just beyond, right? FSD, robots, etc. Now, before we get into that, do me a favor, hit the like button, hit the subscribe button, ring that bell. If you guys want, you can find some of our merch. You can see stuff like this, the Fremont, Shanghai, Austin, Berlin's gear. We've got a lot of that on the merch. So I'll just throw that over there for now. And then if you guys want to support the channel even more, you can find our Patreon link down below. Before we dive into it, in case you're wondering why I'm in a new location, not in front of my window, I kind of hurt my ankle. It seems like it's definitely a grade 3 sprain, but I might have broken it. The x-rays are kind of inconclusive. So until further notice, so that I don't have to be going up and down the stairs, I'm going to be recording from here. So hopefully that doesn't bother you guys too much. And with that said, let's get into it. The first thing I want to do is I want to just dive into this article, this report from Gene Munster. So let me go ahead and share my screen with all of you. You can come up here. You can kind of see the general image that they have here, all the research, Gene Munster, and this was published today. So Tesla is putting way more than traditional auto in trouble. So he goes on to say, it's no surprise that my attention has been focused on the potential downfall of traditional autos as I've studied Tesla's ascent. Why? Because the company has grown 4 to 5x faster than the traditional car maker. But that's just the beginning. Again, this is just the beginning, right? This is very important to understand. The sub-theme orbiting the conversation around Tesla is that it's more than a car company, and it's much more than a tech company. It's an energy company in hiding. In reviewing the details of Tesla's March quarter, it has become increasingly clear that Tesla has the potential to be even more than an energy company. When I apply what I've learned from studying Apple's evolution over the last 20 years, I realize that it's not just traditional autos that's in trouble. Okay. This is the same thing we've all known. We all talk about this nonstop, right, ad nauseum. But let's get a little more into it, right? Gene does a good deep dive here. Traditional auto is in trouble. In the summer of 2020, I wrote, the rest of the auto industry is in trouble. As demand for Tesla continues to outpace the broader industry, it is becoming increasingly difficult for traditional automakers to catch up. As Tesla scales to meet demand, Tesla's price performance gap versus other car makers will widen because other car makers are producing EVs subscale. All right, so here's the dilemma, all right? This is the catch-22 for all of them. Okay, so they have two routes they can take. Here's the first. If traditional autos release a car with features and range at parity and sells the car at cost, it will be priced 10 to 25% higher than a comparable Tesla. This will soften demand and lead to further market share loss for these OEMs. Okay, so what's the second option? Or if a traditional auto subsidizes vehicles to gain market share, in other words, they cut costs as low as possible. Cut cost means to the consumers, the buyers, right? We sell them essentially at cost, right? That's what he's saying here. So subsidized vehicles to gain market share, they will lose money with limited margin cushion. The more they sell, the more money they lose. To that end, we believe that legacy car companies will eventually be forced to restructure or go out of business within the next decade. Something we've been saying nonstop on this channel, right? I think either they will go bankrupt. I think they will combine together to form a new company, a la Stellantis, for example, right? Or they will just be shells of who they once were, right? Maybe Ford all of a sudden only makes F-150s and nothing else. It's a real possibility. So he goes on to say, those with a different view from mine would say, look at the facts. Traditional auto is doing fine as evidenced by Tesla's global EV market share decline. It's hard to put solid numbers on the magnitude of decline, but that view misses the point. It's true that over time, Tesla's share of the auto market will shrink to 15 to 25% of sales as all cars go electric. That market share target aligns with Musk's long-term goal of selling 20 million cars per year, a goal that is distant given the company will deliver around 1.4 million cars in 2022. I believe, Gene Munster is saying, they'll get there eventually in 10 to 15 years. If that happens, Tesla will likely become the largest car maker in the world, displacing the incumbent, just like the iPhone displaced Nokia and BlackBerry. What Gene is saying is that there are three factors to keep in mind. One, that the automakers can either sell the vehicles at the same, attempting to make the same margins they currently do, if not even more. But the problem then is that they're going to be just way more expensive than what Tesla is. So that's obviously not a solution, because all you're going to do is send people towards Tesla. Okay, option two. Well, what if we try to undercut and try to sell it even cheaper than what Tesla is, or even around the same price as Tesla? Well, the problem then is they're losing money, right? They don't have the efficiencies for it. Okay, so there's two. The third part of this is that, yes, the common argument is that Tesla is losing market share. Well, again, this is the same old simplistic way of thinking. What they see is one big pizza pie, and in their opinion is that Tesla's losing share of that pizza pie. But here's the difference. Until recently, Tesla was the only electric vehicle maker out there. So of course, as more people come, they're going to lose market share. But the difference is they're growing their total sales, right? So it's hard to explain this to people sometimes. I feel like I need to hop on the whiteboard and show it to them. If this is the pie and nobody else is playing within that pie, well, of course, you're going to lose market share because now you don't own 100%. Now there's a new entry. Even if they only sell one vehicle, if that's all they sold is one vehicle, well, then you lost market share. So it's just it's a game of statistics, and it's not something that you really want to use as your argument, because it's going to be a weak one. All right, so what's the difference? Why can't these other automakers really keep up with Tesla? Well, look, we can talk about all the obvious stuff, with the dealerships, with the castings. We can go on and on with all the different ways that Tesla is more efficient and why they can do things at a cheaper cost, more cost-effective way, so that then they can sell it with higher margins. But you have already heard all these before. I want to show you something from the investor deck that really highlights this just to another level. And I thought this was such a beautiful way to demonstrate it. So let me go ahead and share my screen. So here we can see on the left, the Model 3, right? So this is the typical Model 3 that we saw before we ever had any of the the giga castings or mega castings, whatever they're called. And on the right, we can see what it looks like once we have the castings, right? This is the Austin Model Y. We got the front casting, we got the rear casting, and then you'll have a structural pack that goes in the middle. Now, the thing that people miss, it's that, okay, yes, Tesla's doing this thing. And right, honestly, I think that Tesla's doing themselves a disservice on this slide. Yes, the Model 3 body structure, 171 pieces of metal highlighted, 171. So they're essentially taking the 171 and they're replacing it with two pieces. And that's talked about here, right? And then on top of that, it's 1,600 fewer welds. Well, here's the stuff that they're not putting on this slide deck. They're not talking about all the different stamping equipment you need for every one of these 171 pieces. What they're not talking about is all of the extra robots needed for all the welds to be done here. What they're not talking about is all the extra man hours used to do all of this. What they're not talking about is all of the nuts and the bolts and the sealers that are used for all of this. What they're not talking about is all of the time it takes to train people to put all these pieces together and make sure they're put correctly, right? And then how do you bring things together to make sure that they're seamless? And all of those seams that you're fitting and fixing with an adhesive or a certain weld, or whether it's like MIG or TIG or stick. I doubt they're doing stick, or if they're using any kind of fasteners, right? All those things, like how well was it done? How well were things torqued down? Do you use an adhesive and a torque? Do you just use welding, right? All these things factor into this. Whereas over here, it's literally just a two-step process when it comes to these castings. It takes milliseconds to get these done. That's the big difference. And this is just talking about a small part of this, right? We're not talking about everything else. So this is one part, right? The sheer difference in this. And so we take this, right? We take all these efficiency Tesla's getting, and then we look at these OEMs, right? What are they doing? What's their way to catch up? Well, first of all, again, we can talk about dealerships, which they have and they're committed to. We can talk about unions, on and on. But let's just talk about what we see right here. All right, let's say they want to make a Tesla or a vehicle like a Tesla, like a Model 3 or a Model Y, something similar. Well, they already have all this sunken costs into all of this equipment, all of these stamping machines, all of these robots they already have, all these ways, these factories are laid out in certain ways that made sense for the ICE vehicle, right? When the most important component was that V8, that V6, that inline, right? That's what mattered. And so everything revolved around that. Yet now it's a whole new way of doing things. And so when it comes to management, and this is why people like Sandy Munro harp so much on being anti-MBA when it comes to CEOs, because they're going to think based on the spreadsheet instead of thinking by first principles, instead of thinking about what's the most efficient way to do this. And that makes them want to stick with the equipment they currently have. So how can we take what we currently have and make that work? And in their minds, that is being efficient, right? Because it means we're being efficient with our costs, with our capital. So this is where it becomes this force of a push and pull that is really going to be the difference. And you don't see any OEMs like really making new factories. Sure, Ford's kind of making a new factory, but how much time do they put into this? How much time do they really think this through? Now, the other thing too is everything that we see with Tesla, you have to remember that Tesla has spent over a decade refining and learning and making mistakes, refining, learning, making mistakes, iterating over process after process, realizing that they went left when they should have taken a right. And through all those learnings, all those mistakes, they have come to the point where they are opening Giga Berlin and Giga Austin, which are supposed to be the most sophisticated manufacturing plants in the world. So for all these other OEMs to think that they can just come and just create a new factory and boom, they can do the same thing at the same cost and the same efficiency, it's delusional at best. And we haven't even talked about all the other problems. All we're talking about is essentially the sheet metal, right? How are you making that? And then we haven't even talked about the efficiencies of how they have no waste. I mean, it just goes on and on. And so this is why what Gene is saying here is so profound, because there's no way for these companies to come back. And then don't forget, they also have to balance their current ICE business, which is what's funding this new electric vehicle business. I mean, this is the ultimate catch-22. This is the ultimate Osborne effect. So I want to show you another slide. So take a look at this. So here we can see Tesla vehicle gross orders in the US, Super Bowl effect. So here we can see the days going on and on, right? Normal. And then boom, we hit the day after the Super Bowl or the day of the Super Bowl. And essentially they double in the amount of orders that they get. So why is this happening? Why did Tesla get such a big bump? Is it because they did all this advertising during the Super Bowl? No. Most of you know this. Most of you watched it. Most of you are fans of this channel and other YouTube channels, so you already know this. Tesla doesn't spend money on advertisement. Tesla doesn't put up commercials during the Super Bowl, but everybody else does. And the weird thing is everybody else goes ahead and spends money on all these ads and these commercials, and yet Tesla gets this bump. Well, why? I was thinking about this when I saw this. What would the conversation have been? And picture this. Tell me you can't see this. Imagine a room full of people who are watching a Super Bowl. Boom, an electric vehicle comes up, commercial. Oh, that looks cool. If there's one person in that room that had a Tesla, do you not think somebody would have been like, hey, Jessica, you drive a Tesla, right? Or, hey, Bill, you drive an EV, right? And then what do you think happens? Then they start talking about it. They talk about how great it is. They start advertising on behalf of Tesla, right? That's what's crazy. I really think the conversations, I think all those electric vehicle commercials led to conversations about Teslas. I don't think they went to conversations about Ford or about GM or about Volkswagen. I think people saw those commercials and immediately thought Tesla. And I think that's going to be the biggest thing a lot of investors and analysts miss. When people think about smartphones, people tend to think about iPhones. When people think about electric vehicles, people think about Teslas, right? It's that brand recognition, right? It's just immediately, that's what you come to. And so I think that's going to be a bigger effect than people realize. When people want to buy an electric vehicle, they're going to want to buy a Tesla, not anything else. So the next segment is talking about how Lyft and Uber are in trouble. Given its safety benefits, autonomy will eventually be a mandated feature in every car. While Musk's push to put FSD on roads before it's ready is a flawed approach, it is one that should yield a long-term competitive advantage in the race to feed the self-driving neural network. If Tesla wins the race, they'll put the hammer down on ride sharing. I don't agree with Gene Munster on the fact that it's a flawed approach. I think this is the only approach. I think it's the only way you can get enough data to solve this problem. I think all these other auto companies, whether it's Waymo or Cruise, are going to hit a local maximum, just like Elon talks about. I'm not saying this just because Elon says this, but I'm saying this because I've been watching this. I've watched Waymo, I've watched Cruise, and I've watched FSD beta. And the only one that I can tell you that is actually increasing, improving, iterating at rates that show improvement is FSD. All right, Waymo struggled for a long time in Chandler, Arizona. Now, hey, Waymo's doing pretty good in Chandler, Arizona. Cruise is still pretty much struggling in San Fran. Hey, they're doing some stuff. They're starting to doing some rowboat taxis at late at night. So that's something. But how long have they been in these markets? How long did that take them? It's not scalable at all. Meanwhile, here we have Tesla. Over 100,000 beta testers. Over 50 states. Hundreds of cities. 2 countries. Set to release FSD beta wide. FSD beta wide to all of the people, everyone who has it in the United States by the end of the year. Think about that. This company is scaling massively. And so the data they're going to get is just going to be unprecedented. And the big thing is, it's not just about getting data. And I think a lot of people mix this up. Yes, the data is important, but what's more important is having good data. And so the next part of it, once you get all the data, is do you have a good engine to go ahead and parse out the useless data that you don't need and keep the good stuff? Because keep in mind, the majority of miles driven at this point with FSD beta are good, 0 interventions, nothing interesting. So we have to be able to parse that out. And it shouldn't only be by disengagements or users using the camera to send back, right? You want the camera to be, or the engine to be able to go ahead and pull things that it needs, that it's learning or training from. So they're not in the same ballpark at all. So Gene goes on to say, Musk commented on the Q1 call that they're working on a new vehicle and a dedicated robo-taxi that's highly optimized for autonomy. It would not have steering wheels or pedals and would be optimized for trying to achieve the lowest fully considered cost per mile. Elon expects to have volume production of the robotaxi in 2024. Assuming that actual production is delayed a couple of years means that Lyft and Uber, as we know them, have about 4 years left. That's a very profound statement. And let me back up here because I was on with Yashu from Hit That Bid yesterday. We had an interview. If you guys haven't seen it, I'll leave a card somewhere around here. You'll see it. You can check it out. It was a great interview. But what he also pointed out during that interview was, look, Elon expects to have volume productions of robotaxi in 2024. So in order to have volume by 2024, they're probably going to start in 2023 with low production. So this is coming fast based on what Elon is hoping for. And I think that Gene's right. If this is true, let's say 2024 is the date, and he's saying, okay, Elon time, say Elon's off by a couple of years. Then at best, Lyft and Uber only have 4 years left. 4 years left. That is heavy. So again, this is all predicated based on this happening, this working, and Tesla solving this problem. But if you've been watching any of the FSD betas videos, it seems like we're getting a lot closer. Now, some people seem to be skeptical about how the improvements are going, but other people are just very confident about it, and we're seeing all these 0 disengagement drives. So I think the next 6 months will be very telling with the progress. Gene goes on to say, while ride-sharing companies have partnered to find a path to autonomy, and those partners will eventually get the autonomy piece right, they won't be able to keep up on the production side. Autonomy without production is meaningless. So this is yet again something that we talked about during our interview, right? So one part is to get to autonomy. Another part is to be able to take that technology and place it into vehicles, right? Waymo, Cruise, right? Mobileye, they don't build cars. They're not in manufacturing, whereas Tesla is the full stack, as we all know. So there's a big difference there. They're not in the business of building cars. So that's going to be one headwind for them. And then Gene also said that he thinks that everybody will eventually get there. I don't agree with this. And this is my own bias. I have no reason to believe this, but just based on what I've been seeing, I do not think everybody's going to get there. I think Waymo, maybe Cruise will have a little something here and there. But at the end of the day, I think as Tesla builds out, as Tesla scales out, I don't think that those are going to be businesses that remain. I think that they will go by the wayside, or they'll get bought up by some other OEM who's trying to make a last-ditch effort to solve this. Instead, I think it's more realistic that Tesla just kind of has a monopoly on this, or they license out the technology to other companies, which I think Volkswagen, because of the relationship between Elon and Herbert Diess, as we saw even more tweets over the last couple of days between the two of them, I can see that Volkswagen asking Elon, hey, you offered for us to license this technology, we'll take you up on that. As far as I know, I don't think Volkswagen's really doing anything right now with regards to autonomy. They might be doing something with Mobileye, but I'm not sure. Honestly, I'm ignorant when it comes to what Volkswagen's doing in that realm. But either way, I think this is a big deal. I think once FSD happens, it's, as Elon said in 2019, it's game, set, match. At that point, it's over. All right. Why would you ever buy any vehicle that can't drive itself? Why would you ever choose to buy another vehicle when you barely drive if you can just take a robo-taxi? Why would you ever use an Uber or a Lyft that costs 10 times more, 20 times more than a robo-taxi? I mean, if anything, I would rather be in a robo-taxi just so I don't have to talk to whoever the driver is, right? There's nothing that annoys me more than when I have my headphones in and they try to start up a conversation. So I think this is look, everybody wants to underestimate this. I've been watching CNBC all day. I keep it on the background, right? So I'm listening to them while I'm working, and everybody just has all this skepticism. Like, how many things does Elon have to do for him to dispel this skepticism of people? Whether it's PayPal, when people said, oh, nobody's ever going to send money over the internet. Okay, well, that turned out to be wrong. Whether it's SpaceX, oh, no individual can do what countries do and NASA does. And here we are with SpaceX. And SpaceX, again, oh, you can't reuse rockets or you can't make them land. Okay, well, SpaceX sure has done that quite a lot lately. Not only that, but now they're about to have the first and second stage being reusable once Starship is done, right? So we'll see what that looks like. And that'll probably happen this year. What else? Electric vehicles. Oh, it'll always be a gimmick. It'll always be something that, yeah, it's cute and fun, but it's not something that can be an everyday vehicle. What's happening now? Everybody's going to electric vehicles. It's disrupting the entire internal combustion engine world. So how many times does Elon and his team of engineers have to hit home runs before everybody realizes this isn't a fluke? Now, on the other hand, there's a benefit here. The benefit is to you, it's to me, is that we get to keep investing until everybody else realizes this. It's not often that this happens. Yes, we're at $1,000. Let me see. We're at $1,005 right now in post-market. Okay. Yeah, that's $1 trillion value. It's just getting started. I know it seems expensive, but it's not, especially if you have your own models and if you've broken it down. If you don't have your own models, you can check out mine down below. You can hit the link for my Patreon link. You can go check out the models. All right? Like this is the most obvious thing I have ever seen. And I'll call it luck. I got lucky with Apple right before the iPhone. I got lucky with Amazon with AWS. I'm getting lucky now again with Tesla and FSD and humanoids. Speaking of which, let's go ahead and talk about humanoids and insurance. So we'll start off with the insurance. So here, Gene goes on to say Geico and Allstate are in trouble. The last question on the earnings call sparked an update from Zach Kirkhorn, and Musk on Tesla's insurance. Typically, the final question on an earnings call is of little interest. That wasn't the case this time. The executives clearly wanted to talk on their key add-on service. In 6 months, Tesla has become the second largest insurer of Tesla vehicles in the state of Texas. By this summer, Kirkhorn believes that Tesla will be the largest insurer of Tesla vehicles, period. Rapid adoption is attributed to Tesla's lower insurance prices since both the driver and Tesla receive real-time driving feedback that impacts premiums. Traditional auto insurance won't be able to compete because they will lack the vertically integrated real-time data that Tesla can share and optimize. Regular insurance companies offer a tracking dongle to monitor driving habits and provide a discount, but those solutions fall short of the speed and gamification of Tesla's good driver feedback loop. Separately, real-time feedback improves driving habits, which makes cars safer and lowers the risk to the insurer. Long-term, real-time feedback won't matter because humans won't drive, and Tesla is already thinking about where to add value in insurance, same-day repair for collision. So let me sum all that up. If you bought a Tesla and Tesla said, hey, you can use Tesla insurance, and as long as you drive good, your cost for insurance will go down. If you drive bad, it'll go up a little bit, and you can see in real time exactly what your costs will be. And even if you're just an okay driver, you're not the best driver in the world, it still will be lower than Geico, Allstate, or anyone else. Would you not choose to go that route? Yeah, I mean, this is game, set, match. Let's move on to the Humanoid. Physical labor is in trouble. Musk is clearly enthusiastic about Optimus project, saying on the call that people do not realize the magnitude of the Optimus robot. He added that the importance of Optimus will become apparent in the coming years, and that it is his firm belief that those who are insightful or who listen carefully will understand that Optimus ultimately will be worth more than the car business and worth more than FSD. This is the biggest thing that was said on this call. I cannot stress this enough. If I say this a lot lately, you're not investing into Tesla. You're investing into Elon Musk. You're investing into Zach. You're investing into Drew. You're investing into Andre. You're investing into the people at Tesla. Now, if you truly think that they are not going to solve this, then ignore what I'm about to say. But if you believe that Elon Musk seems to have an ability to predict what the future is going to be and then make that become a reality, then this is him telling you, hey, here's the biggest call option in the history of your life that you will ever see. He is literally telling you, for those who are insightful or who listen carefully, will understand that Optimus ultimately will be worth more than the car business and worth more than FSD. Not or, and. Think about that. Do I know if it's going to work? No, I have no idea. However, I don't bet against Elon. I don't think anyone should bet against Elon. It's like betting against Tom Brady. Doesn't turn out too good for you. Now, Gene goes on to kind of highlight a few things here. He says, cynics will say, Optimus is just a Musk diversion. My challenge to this approach is that Tesla's core business is strong and still in its infancy, so there's no need to divert attention away from it. The pragmatist will say, Musk doesn't know if Optimus will work, but he knows that he has to sell it to investors, and more importantly, he has to recruit the talent to build it. He's saying, come work at Tesla, and you could build a segment that's bigger than our auto business. The optimist will say, Musk is onto something. The world is built around human form, and the fastest way to automate labor is to build humanoids that plug into existing infrastructure. If Musk pulls it off, physical labor will be shifted to robots, and the value created for shareholders would skyrocket past the value of EV autonomy. It's a long shot, but one worth taking. Now, I don't think that a pragmatist, because I like to think I'm a pragmatist. I may come off as a fanboy or a complete Tesla bull, but I like to think I reason through logic, and I think I'm pretty calculated in my approach. I believe that humanoids are definitely possible, and I think they will come. I've watched Boston Dynamics for years, and Boston Dynamics has a lot of cool things they do. So what we know based on Boston Dynamics is that physically, mechanically, with actuators, batteries, we know that these things are doable. All right, we already have robots all over the world, all over Tesla manufacturing plants. Other OEMs use them. I mean, we see Amazon warehouses use robots. So robots are already a real thing, right? Now, the humanoid aesthetic of it and the figure and the mechanical layout of a human body, that we already know also can work because of what we've seen Boston Dynamics do. Now, the big hitch with robots working, and the big issue with robots in general, is that they take a lot of coding, a lot of heuristics. All right. Essentially, I have to tell it via code, hey, do this, hey, do that, hey, in this situation, don't do that, or do that. Now, what Tesla is looking to do is to build the brain. Forget about the physical part. Okay, that's a humanoid. Cool, great. Forget about that. What Tesla's doing is building the brain of the humanoid. And that's the thing companies like Boston Dynamics haven't been able to do, right? They're literally just sitting there physically typing in the codes instead of developing the brain. With FSD, they are developing the very beginnings of that brain. And so if we can take that, use that as a platform to build up for the humanoid, that is when things kind of get nutty. And that's when you really start to think, right? The biggest thing is, do we have the technology? Do we have all the things right now? Or does something have to be invented that's crazy? Or is it really a matter of taking these things, putting them together, and maybe with a few brilliant people figuring it out? And the thing is, that's where I think we are. So that's why I think it's possible. And if anyone's going to figure this out and iterate and be efficient about it and not waste time, it will be Tesla. So what is the real limitation here? It's just training the neural nets. And guess who has the best team in the world for training neural nets? Tesla. I'm not saying it's a guarantee, but if you're being pragmatic about it, I think it's a fairly safe bet to think that they have a very good shot at it. Now, FSD, I'm way more confident in because I see it with my own eyes. I watch it. I watch the videos. But this humanoid, if FSD is a call option on Tesla, if the EV business alone, and throw in insurance there if you want, and the energy business, if that alone can get us to 10 trillion this decade, you throw FSD in there, maybe that's 10 to 15 trillion. What happens when you add in Optimus? Is that not something that you're willing to invest in? I mean, and meanwhile, while you're invested in that potential amazing call option that can redefine what an economy is, in the meantime, you can still 10x your investment. I mean, this is why it's a no-brainer to me. All right, so I'm very happy that Gene wrote this. I think it was a very good synopsis of what we learned, or what we heard more from on the earnings call. Obviously, we learned about the robo-taxis. That was new, so that was great to hear. I mean, it just shows you how bullish Elon is right now and how fast that they believe FSD is actually improving. So a lot of good things there. But again, Gene Munster, I thought this was excellent. I want to do a review of the earnings call since I haven't done one yet. And I think this was a great way to do that and really highlight the things that I took away. The financials, those always look great, right? Cool. What I really care about is the tech and where things are going, the sentiment, what is the future. And I think Gene was able to really grasp it here. All right. EVs are taking over. Tesla is going to lose a little bit of market share, but that's natural, right? Because more people are coming in. But Tesla will be the dominant. Tesla is the iPhone of the EV world, of the automobile world, really. Insurance is coming. I mean, it's here, right? There are more. By the end of this year, there will probably be more Teslas using Tesla insurance than any other insurance, and it only makes logical sense. FSD is iterating so fast. By the end of this year, odds are every person with a Tesla who purchased FSD will have FSD beta. And then from there, they're working on robo-taxis, set to go in volume in 2024, which means they're going to have to start building in 2023. That's next year. That's 6 months away. 7 months away from 2023. So, I mean, this stuff's happening. We're here. We're starting to get into that inflection point of everything starting to collapse and start to finally happen, right? We've waited for so long, and now D-Day is coming. We can see it. It's within our sights, right? We have a couple more exits to go, and we're there. So very bullish time, in my opinion. The stock is doing interesting things, but that's what the stock market does. Again, this is why we invest for the long term. Yes, important to check on it every day, keep an eye on it, just so that you know where things are. And like I always say, it's fun. All right, speaking of fun, I enjoyed this video. I hope you guys did as well. Do me a favor, if you enjoy this content, hit the like button, hit the subscribe button, ring that bell. I appreciate you guys if you stuck to the end. Don't forget, we do have a Patreon link down below. You can subscribe. And also, there we go. I got some merch here. If you guys want, you can find the merch link down below. All right. Appreciate it, guys. Peace.